Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. And markets are just waiting for what Donald Trump is going to do in the coming days. Already, he has declared a national energy emergency, part of a sweeping agenda that aims to increase fossil fuel production and what he calls the Green New Deal, and also withdraw the U.S. from international commitments to fight climate change. So his first day as the U.S. president already looking quite busy. And to unpack what all this means for markets and investors, we've got Vasu Menon. He's the Managing Director for Investment Strategy for OCBC Bank. Vasu, good morning, and of course a Happy New Year to you.
Good morning, Ryan. Happy New Year to you as well as all the listeners on the program.
Yep, new year and new U.S. president. Lots to watch out for when it comes to markets. All right, let's take a look at what we have on his first day. Already quite a busy one. He has declared a bunch of stuff. All right, what are your main takeaways so far from what we've been hearing?
Well, the good piece of news is that, he's gone light on tariffs. Markets expected him to come out aggressively with tariffs, 60% on China, 10% universal tariffs, 25% on, Mexico and Canada. That has not happened. He's asked his cabinet to study tariffs, and he seems to have pushed it off for now, and that's provided relief for the market. Wall Street futures are up quite sharply. Asian markets also opening stronger. Tokyo, Australia, Korea, they're all stronger this morning, and that could spill over into Asia. He's talked about, as you said, a national energy emergency. That means increasing oil production. Now, this is not going to happen overnight. It will take time, but, the direction is quite clear. He wants, clearly 3 million barrels more of oil to be produced by the U.S. going forward. And, of course, his other national emergency is at the border, the U.S.-Mexico border. He's focused on illegal immigrants. And let's see what he does, because, the national emergency allows him to use American military and assets, but the question is whether he'll get challenged in court, because there are provisions in the American law that restricts the use of American military for domestic purposes. But we'll see what happens there. To me, what's interesting is that although he's talked about illegal immigrants, if you cast your mind back to his first term in office, in reality, under his term, we saw 1.5 million illegal immigrants being deported. Now, that's substantially lower than what Obama did. In Obama's first term, it was 2.9 million. In his second term, 1.9. So, it remains to be seen whether Trump will really be as aggressive as he sounds, when it comes to illegal immigrants, because there will be implications for the agricultural sector, for example, which depends a lot on illegal immigrants, and for many other sectors in the U.S. To me, the other interesting point is that he's made it very clear to his cabinet to use all their powers to fight inflation. So, lower energy prices, I'm not sure how deportation of illegal immigrants will fit into that. It doesn't square off exactly, but it's quite clear that, he's keeping a very close eye on inflation, energy, and he's not trying to rock the boat as far as inflation is concerned, which is good news for the market.
Yeah, that's a very interesting point, right? He seems to have an eye on inflation or the potential inflationary pressures. He's doing, I suppose, a favor for the U.S. economy by bringing down oil prices, by producing more oil. Also, I suppose tariffs will be a big question mark. How does it square off? If you're going to be implementing tariffs, it will be higher costs potentially for U.S. companies, right?
That's right. So I'm not surprised that he's decided to put it off. He wants a greater study of tariffs, and other trade issues before he does anything. Instead of a sledgehammer, he's going to use it as a negotiating tool. So my suspicion is that he will impose some tariffs, but it may not be as aggressive as what the markets eventually anticipate, and which is going to be good news for the market. Energy production, you're right, he's going to produce a lot more oil. That's his plan, but it's not something that's going to happen overnight. And we also know that oil prices are not just dictated by what happens in the U.S. Also depends on OPEC, other non-OPEC countries. So, it's more complicated than just U.S. oil production. Of course, if he produces 3 million more barrels of oil per day, that can, lead to lower energy prices, and which is good news for U.S. inflation as well.
Yeah, I suppose part of the equation is even though he wants the oil majors to drill, it might not necessarily take place. You need the companies themselves to also want to drill. So there are a lot of moving parts here. And also you pointed out a very good point about how all this could be rhetoric in order to cut the deal. So lots to be seen on that front. And you mentioned as well how he's going to be focusing more on drilling away from the green sector. So is that going to be a big blow to, I suppose, the global green agenda and the solar sector, EVs as well?
It is to some extent a blow, but his policies are very domestic. America, he's taking away the consumer tax credits for EVs. He's removing the subsidies that, Biden had implemented for renewable energy. So, yes, it will impact U.S. players. But globally, I think the Paris Climate Accord is still very much intact. The rest of the world is still pushing for climate change. The rest of the world is still moving towards EVs. And I'm not sure whether he'll be able to stop that global trend. He may try and do it domestically, but globally, solar panels, clean energy, green technology, those things are, I think, unstoppable. Those are super trends that I think are going to change the face of the world. I'm not sure whether Trump is going to be able to reverse that on his own.
Now, talking about super trends playing out, he has been talking all about how he's going to be focusing on national security. So AI comes into the frame. How do you see this playing out for the tech sector for both sides, China as well as the US?
Yeah, this is something where you got bipartisan support. Both the Democrats and the Republicans see eye to eye on this. They want to make sure that, the politically sensitive, national security sensitive chips do not end up in China's hands. But, China is not pushed over either. China has also said that they're investigating US chips being shipped into China to see whether, the US government has provided them with subsidies and whether there's any form of dumping. So there could be, greater action, fury in the chip sector. There could even be a chip war in time to come. But, as far as AI is concerned, I think Trump is all for it. He's pro-AI, pro-crypto, pro-technology. You can see for his inauguration, all the major tech players or tech CEOs were there. Clearly, he's in favor of tech, giving tech, less regulation, lightening the regulation in the tech sector. So that augurs well for the tech sector, actually. And we think, AI is another super trend, as you mentioned. Unstoppable. I think in the next 10, 15 years, it's going to change completely the way we live.
All right, Vasu, with all this in the backdrop, what do you like in the markets right now, considering how there are all these policies that could take place? Of course, he's been promising to be more pro-business, and we could see more M&A going on. What are some of the sectors you like right now?
Ryan, we are basically risk on. We are positive on, the equity markets. We are positive on U.S. equities. We are positive on Asia ex-Japan equities, although they've underperformed U.S. equities in recent months. I think sectors that look interesting would be technology. We talked about AI. We think that that's an unstoppable trend, but it's a very volatile sector. But if you take a medium-term view, I think you can't get it wrong. So we like the tech sector. We like the healthcare sector to some extent because we think, again, the global population is aging. That sector will benefit. We like consumer discretionary. We like consumer staples. The financial sector, which should also benefit to some extent from Trump's policies, especially if inflation expectations are elevated, interest rates are not cut as much, financial stocks would actually benefit. So there you have it, some sectors that could benefit. And, energy, fossil fuel, tech sector, as you said, M&A, greater M&A activity could take place. So there are quite a lot of opportunities. And I think the key thing about Trump is that he's going to be highly unpredictable. Markets are going to be highly volatile, excluding what's going to happen, in the next 24 hours. Going forward, things can change. One tweet can change the whole equation. So expect a very volatile market in 2025, but do not ignore the opportunities because they are there. And eventually, I think by the end of the year, some of these opportunities could play out to provide pretty good returns.
Trump providing some tailwinds for markets, and we are unpacking what he has already been saying on day one of his time in office. We've been in conversation with Vasu Menon. He is the Managing Director for Investment Strategy at OCBC Bank. Vasu, thanks for the time, and we'll catch up with you again soon.
Thank you very much, Ryan, for having me on the show.
All right. See you. Stay Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.